All right, so welcome everyone. Thank you so much for joining. So I wanted to start off this presentation by giving you an introduction to Insurio. So you may be asking, well, what is Insurio? So Insurio is a life insurance CRM built by life insurance agents for life insurance agents. And it's actually included at no cost to you when you work with Penny. So what does Penny offer? So we offer high compensation. We offer exclusive product access, top-rated e-app tools like iGo, Firelight, and quoting access for major carriers. And we offer full-service support. So we offer case management. We offer app fulfillment. We offer policy delivery. And we have best-in-class underwriting. So what makes Insurio such a game changer? So as you can see, here's how you visit Insurio. You just go to insurio.com, and I'm actually already logged in. So Insurio is, as I said before, it's a life insurance CRM built by life insurance agents for life insurance agents. So with Insurio, you get all-in-one carrier access. So how you access that is you go right here, new quote, and let's just click right here. And then you can actually submit your applications to top carriers like Banner, AIG, Protective, Fidelity, all within this seamless platform. And then we also offer smart automated marketing. So how you go to that is you go right down here and you go, first I want to introduce marketing templates. So not only do we have built-in quoting tools, but we also have a built-in email scheduler with marketing templates already set up for you. And then we can also go to marketing campaigns. So we also have high-quality pre-built marketing campaigns that automatically go out on your behalf. And probably the best feature, I would say, of Insurio is the automatic website that's created for you. So how you go there, go to links, and then you're brought here, and it's going to give you your custom Insurio link right here under brand. And it may take a little bit to load. And as you can see, right there it is. So this is actually a website that was automatically built for me based on based on my profile. So as you can see, everything is automatically set up for you. It's a high quality website. CTAs down here, get your free quote. It's mobile friendly. And so this actually has built-in quoting tools, an email opt-in scheduler, and it gives product info and carrier listings. So it's such a great feature. It's one of my favorite features of Insurio. So everything you've seen, CRM, marketing automation, quoting tools, and a full-featured website is available for free when you work with Penny. So just if you need access, just reach out to myself or support from Penny. And now, without further ado, I'm going to pass the mic over to Anna.
Thank you. Hi, everyone. This is our third meeting in this series about Principal Business Solutions. I am the regional wholesaler for the Northwest region or any agents that are under Penny. So today, this is all about key person insurance, how to sell it, how it works, what the illustrations look like, and the tools we have for it. So our business market solutions team gives you everything you need to find success in prospecting and selling in the business market. We offer over 30 complete solutions, lots of experience between our advanced market, wholesaling, and underwriting teams, and ongoing administrative services. So let's talk about key person insurance. Why would a business need this type of insurance? It helps to protect them when a key employee dies, becomes disabled, or leaves the company. By using life insurance for key person, there's the death benefit protection and potential cash value liquidity for a financial cushion to help the owners in case they want to recruit a new employee, to help hire, and to help train. So with the insurance or without, there's going to be costs of losing a key employee. And by having the protection in place, it helps the business not have as big of a financial or operational hit. Every organization incurs costs like the contractual benefits for employment contracts, the cost of healthcare, disruption to management or operations, revenue loss, loss of skill and expertise, or of reputation, recruiting power, client relationship. It can impact a wide array of things if you lose a really important person. The challenges for a business when they do lose a key employee is finding a replacement, the time frame, especially depending on the event, whether that's a death, disability, or departure. These are often unpredictable and unexpected. To meet the outstanding obligations, maintaining business continuity, and protecting the relationships both internally and externally. Every year, Principal does a survey of lots of businesses around the United States to identify business owner priorities and different industries, company sizes to see where these things are selling. So this most recent year, as you can see on the far left side, is the key person life insurance. So the top 5 industries were professional, scientific, and technical services, construction, manufacturing, finance and insurance, healthcare, and social assistance. So as the agent, just think about your book of business and who you might have in those industries, what business owners might be in your book of business, to see how you can help assist them with these kinds of plans. 55% of these have 24 or fewer employees, and 63% are established businesses, so they've been around for over 10 years. And you can see the average sales volume is typically under $3 million. Principal specializes in the business space, but particularly in the small to mid-sized business space. So our plans are fit for business owners at this scale. How do you help a business owner have the conversation on determining the difference makers? Or we like to call it the people that are mission critical. Like if they left, that it would have a significant impact on the business. So who are the people that have a major impact to operations and workflow? They're relationship managers or have a direct impact to sales and profitability. The way that this life insurance works is the employer would take out a policy on the key employee. So the employer is paying the insurance premiums on the covered employee. And then in the case that the employee were to pass away, the death benefits would go to the employer as the beneficiary. So if a company has 5 key employees, this would be 5 different policies, all of them, there's the individual, they go through underwriting, they have an individual policy, and all of them, the employer is the beneficiary. Potential uses for this benefit, it is just a lump sum of money if they receive the death benefit and they can use it totally at their discretion. So these are just some of the ways that this money could be used. It could be replacing lost earnings, maintaining business credit position, giving them a financial cushion, helping offset lost business value, to help recruit, make survivor income payments, funding the buy-sell agreement or a stock redemption agreement, and it could also be used for funding a non-qualified retirement plan. I mentioned this previously. We have a tool that can help you determine the amount of coverage that would be needed, whether it is an owner or a key employee, and I'll be getting into the sample outputs for these reports. So in this output, this was for a business owner. So as you can see, there are over 51 employees, 1 to 5 key employees that are impossible to replace. And then we'd get their compensation information. Because they're an owner, we would need to know the business succession needs. So that's the estimated business value, percent of ownership, business debt, and then if they have any other business needs. So by looking at these 4 different areas, we were able to get this range of coverage. So base level is 3 times income. That is the minimum that we would suggest for key person coverage. And then when we add in these other aspects for succession and additional coverage, the minimum amount of coverage recommended for this owner was 6.5 million. And then we have 2 more levels. The second level would be the 5.5x, and then the high level is 8.5. So this ranges from 6 million to almost 9.5 million. And this can be determined by the owner's comfort level with doing this kind of a plan, the budget for the plan, how long it should be in place. And this can vary based on the duration of the term they pick, or if they do a permanent insurance option, how much money they're using to fund the plan for premiums to get to a certain amount of cash value or death benefit, and how flexible that is. So by working through this report with them, you're able to use this as an aid in the conversation and then get to what they really need. This next output is for a key employee. So in this case, it's a sales VP. And they have the $200,000 compensation. For an employee, a non-owner, the multipliers are 3 minimum still, or 4.5 for a moderate level of coverage, and 7 for a high level of coverage. So the range for this one is 600,000 to 1.4 million, much lower than the owners because they don't have a share in the company, and it's purely based on their compensation. Funding options for this insurance is we can use life insurance, sinking fund, or cash flow funding. Owners are using many different tools over the life of a business to finance unexpected expenses. So it's good to have a variety, to have the cash flow, but it fluctuates a lot over the years. It can go up and down. Sinking fund would give the liquid assets, but it might not be sufficient in early years because it needs funding and time to grow. So having life insurance is the most stable. As you can see, we have the straight line for life insurance. It's lower risk, guaranteed protection, and there could also be the cash value aspect. For funding with life or disability insurance, there are 3 different options, and there's a little more of a breakdown of each option also. So disability insurance, key person replacement. This is a monthly increment or lump sum payment to the business owner after the waiting period has been fulfilled for disability. For the life insurance, that's for the death benefit. So for term, there's 10, 15, 20, and 30 year. And then we have the permanent options with Principal. Those are all universal life products. And I'll get into what that looks like with each of these options for the life insurance. Going back to the example I gave earlier about the business owner that had it was like the 6 million coverage and more. So in this case, here was our death benefits that I suggested. And then as you can see, this is the breakdown of the annual premium based on the duration selected. So like I was saying before, this can be catered to your client's needs, to their budget, or their risk level. And so in this case, we can see the difference between a 10-year and 30-year is about $15,000 in premium. So they have the longer protection, but higher premium to have a 30-year plan. And then a 10-year term plan would be the least expensive option for this type of insurance. We have these 4 funding options. This chart, as you can see, it says the protection on the left all the way over to accumulation. So all of these products have a protection base. It's just what are you getting in addition to the protection? So the term, you're only getting the death benefit for the set amount of time that is in the policy. If we go over to the UL, this is our cheapest permanent policy. It gives long-time guarantees. It has some cash value, but it would be the lowest amount of cash value compared to these other plans. Doing an indexed universal life plan, we have the downside protection. It can only go down to 0%, but there's the upside of it being invested in index funds. So we could see growth anywhere from 6 to 11% of a return on the investment. And then for variable, this has the insurance aspect, but it's also an investment vehicle where they're able to select whatever funds they want to be invested in. It can be totally personalized if they would like to be able to get a good return and have the death benefit protection. So why consider using a permanent life policy over a term policy for key person? By having the policy cash value, there's that immediate liquidity. It's an asset on the balance sheet, and it can be used for a number of business needs. And it's all available without the death having to happen. This is just the fund of money that is available within the insurance policy to take distributions from. Looking at life insurance versus other investment options, the benefit of using life insurance is the contributions are after tax. There's no tax on the growth and there's no tax when withdrawn compared to doing something like a mutual fund or a retirement account where there's the tax as it grows or tax when income is taken out. The life insurance can be advantageous tax-wise. This example is an illustration using indexed universal life insurance. So this one I modeled based on the business owner output that I showed earlier. So in this case, it was for the $6 million death benefit. We wanted that as a minimum. And for this one, I set it as putting $75,000 into the policy every year until age 70. So that's 20 years of paying this premium amount. By using the IUL, we're able to see that there's this accumulated value. So by doing this, after year 10, they have access to $362,410 that could be used for distributions. After year 15, that's almost $800,000. And in year 20, that's $1.3 million. So this will continue to grow as the policy goes on. This snippet is up until the retirement or they might exit the business. So by having that 1.3 million available, that could be used to fund the buyout or for other business needs. In the case of an owner, it's likely that they would let the business continue to keep the insurance on them after they've stopped working at the company. So this jumps ahead 5 years. I just fit it on the screen, but this goes to age 76. So they stopped paying the premiums at age 70, but kept the policy in place. So they're not putting money into it anymore, but it's continuing to grow. So there's still that $6 million death benefit. In this case, it lasts to about age 90. And there's the accumulated value that continues to go up to, I think the highest is this 1,866,000 when that's at age 83. And then it starts to decline because it tends to decline as they get older. But by having access to this accumulated value for this much longer after they exit the business and then access to the death benefit, it could be really valuable to them to use the permanent insurance versus just having done a 20-year term. So I mentioned this before, it can be used for the succession planning, funding the buy-sell. We can also use that cash value for deferred compensation plans or additional retirement income for the owner. The tax implications of a business doing this type of plan are the premiums are paid with after-tax dollars. It is not tax deductible as a business expense, which this is something that I find is important to clarify. People don't always understand this and think it might be. But because the business is the beneficiary, they're getting the tax-free death benefit, it cannot be tax deductible for them. The cash value growth within the policy is tax deferred, and the company receives the death benefit proceeds income tax-free. So lastly, this is just a case study. This is Mark, who is a business owner, and he has a sales team that's very important to the business. His top salesperson is Renee, who brings in more than 35% of the total annual sales revenue. He identified Renee as a critical employee, that the company would be in jeopardy if something were to happen to her. So he works with his financial advisor to find a solution. By using our key person calculator, meeting with the financial professional to talk through their needs, their budgets, and just how this could work for them, they identified that they needed a $700,000 death benefit, and then they also did a $250,000 disability key person policy. And this was all based on the size of the organization, her job title and annual income, and how difficult it would be to replace her. So they had the options for the kind of life insurance that they would do. They could do the 20-year term to cover just until she retires, which was to be the cheapest option that they could do, or they could do the permanent insurance to help cover other company expenses. In this case, they did end up going with the 20-year term because they just didn't have the budget to do permanent insurance at this time. So lastly, just in summary, the benefits and considerations of doing this type of insurance. His benefits is there is ready access to the funds. So they can offset the cost of finding a replacement and loss of revenue by quickly having access to this money, whether that is the death benefit or if they are using the cash value in finding a replacement if someone leaves the company. By using the permanent life insurance, there's the cash value potential. And then the cost efficiency, because the death benefit relative to premiums paid, it's often a good amount of benefit, like percentage wise. And then last benefit is personal insurance is available. The business policy doesn't limit personal protection, so they can have a policy on the insured that's owned by the business. The insured could have their own policy for personal reasons, or if the business wanted to provide some kind of bonus or incentive, they could also set up a plan where the employee's family is the beneficiary. And then things to consider with these kinds of plans. There's several funding and design options like I was discussing. So you want to be careful in deciding what's best for their situation, for their business type, or how established the business is, the size of the business. There's so many different factors to consider. And then the other consideration is using life insurance. They need to be healthy enough to qualify. So they're going to go through underwriting most likely. So they need to be able to pass the underwriting and get a decent rating to have the premium be something that they're willing to pay. And then the impact on the business is that if the owners could be subject to estate tax, they need to consider how to structure this. So that's just if you have a really high earning owner that you're working with, we need to just factor in what the estate tax implications could be. And lastly, the impact on the business assets. We want to see how it impacts capital and liquidity. It's an asset on the balance sheet, but we want to make sure that they have the means to do this and that the structure is right to do this type of plan. Oh, backwards. So key person insurance gives the added protection to have the funds necessary to recover from the loss of top talent. That is all that I have for today. I am always happy to do one-on-one meetings if you have more specific questions or if you want to go over a case. I think it's really effective to go through illustrations together to just see what the options are with the budget that they're working with, and you can toggle with the death benefit type, or the premium amount available. There's just a lot of different ways these can be structured. So it really is a case-by-case basis and valuable to go through them one-on-one. Any questions?
Thanks, Anna, so much. So we're
Yeah.
going to open it up to Q&A right now. I know me personally, I have a lot of questions. So I'm going to consider these like conversational lead-in questions because, I'm always interested in, getting that first lead, particularly like if I'm new to selling key person coverage. And, like I'm starting to realize, oh, wow, there's such a big opportunity here. So my first question is, how do I even begin identifying who in my network or book of business might need key person insurance?
Yeah, first it's identifying who is the business owner. That's the basic first step. And then after that, it's important to determine where their priorities are at. So our plans fall under business protection, the owner protection, and then if they need retention and retirement plans or other types of plans. So we want to get their first priority done first. There's no right order to do these plans in, but you want to figure out that this is their priority. And more often than not, key person is the first thing that they're looking to do because you want to focus on protection of the business before you're focusing on incentivizing your employees. So oftentimes they're going to want the key person insurance. They might not come asking for it, but it is the most popular one once it's explained of how it works and the benefits of it.
And a follow-up to that, are there any specific types of businesses or industries that are easier to approach or more likely to just say yes to this kind of coverage?
Yeah, I think it's the white collar industries are the ones that are most likely to do this kind of coverage. So that could be if it's like a law office, CPAs, sales positions where it's highly educated people that have a specific skill set and are critical to getting the job done.
And do you have any tips or scripts for how to start that first conversation? Especially if like I'm not used to selling to business clients. Like say I'm just used to selling to individuals.
Yeah, when you're having that initial conversation with the business owner, the way this conversation typically starts is, well, one, how many employees do you have? And of those employees, who, if they left tomorrow, would make a huge impact, a negative impact on your business. So to get them thinking about this type of coverage is they need to be thinking about who's really important to the business, and oftentimes that would start with the owners themselves, especially if there's multiple owners, and then it would go to those key employees. So by getting them thinking about how their business operates, who is integral to that operation, that's how you get the ball rolling.
So another question I have is, so based on this, like I want to get in front of more business owners. So what's one thing that I can do this week to start finding leads for this?
Yeah, the owners that are in your book already, we have a like business owner priorities checklist. I think I had sent that out already to help them start thinking about these kinds of plans. And if you're going outside of your existing book of business, it's good to just get into those industry events or um, like town events and the ones that are gathering a lot of like small to mid-sized business owners. And you can start talking about these kinds of plans by just getting in front of them and explaining how these things work because they're not always going to know that even this exists as an option or that life insurance can be used beyond just a death benefit. So by getting in that right audience, you're able to have the conversation and spark interest.
Doesn't look like there are any other questions. So if anyone has any questions, how can they get in touch with you?
Yeah, you can share my contact information or I can share it with everybody. but feel free to reach out, give me a call. We can set up a meeting. I'm totally available to do these kinds of things, whether that is just educating you as the agent on how to present to the client, or if you do have a specific client case, just to talk through ideas of how to structure it, or meeting. I can come onto the client call with you and the client all together.
All right. Well, thank you so much, Anna. This has been great. And thank you all for joining. So at this point, we're going to end the event. Again, thank you all so much for joining. And thank
Thank
you,
you.
Anna.
Yeah, have a good one.
Bye, everyone.